Good morning, everybody. How's everyone doing? Hopefully, you all can hear me. I am broadcasting from beautiful Buenos Aires, Argentina this morning. I am the Backpacktrader after all. And I do see Mike and Steve and Johnny and Miles. So I do see ya. Hopefully, you guys can hear me. Testing. Excellent. Good sound. Awesome. Thank you, John. Okay, so I'm waiting for some data to load. I had to change these charts. I haven't looked at this workspace since the last time I was here. Hopefully that'll load in a moment. Let's do a quick, let's see how much time we got. All right, well, the markets are starting in less than 2 minutes. So just quickly on crude oil, we're in the July contract. I'm sure you guys know that by now. And there was this 9 o'clock start time right here. And unfortunately, it found resistance up here at the 50 moving average and flipped over to short. 110.94 after the adjustment. Yeah, tough adjustment. I was able to, let's see, it went from 111.16. It was 27 ticks. 111.16. What's that end up being? 16 and 6. 24 tick loss if you did that right. And then a 22 minus 6. 16 tick gain. So still behind schedule there. And the next long trade also lost. So if you quit, obviously, it stopped in reversing here. After 3 trades, you end up with a negative session. If you took 1 extra trade, you did pretty well. Actually, it continued to do well all the way down. So I'll let you guys figure out how you traded it. But the mini session, 3 trades total, unfortunately, a little bit out of sync with this morning's price action. Which is unusual because Mondays are usually strong winners for us. Let me know if you guys made any money on crude this morning. Also, this is the full crude contract. We could look at the micro and see if that did any differently. I have to load that chart. I don't know why the RTY is taking so long here. Okay, so the markets have opened. We're keying in on the Dowie Mini. And so far there's no trade. We'll review the others in a moment. We should keep track of soybeans as well. There's a short on soybeans here at 1706. I got a spinning wheel though. Soybeans are short at 1706, targeting 1704 and a quarter, 1703 and a quarter, 1702, and the stop is at 1709 and a quarter. And a possible stop and reverse at 1708 and 3/4. Stop and reverse 1708 and 3/4. We got up to 1708 and a half, so still short on soybeans. And looking for our first trade on the Dowie Mini up in the upper right hand corner here. You can see that the Russell chart has finally come up. I've got a lot of noise in the background. I apologize if you're hearing any of that. Soybeans is an interesting study of how we use adjustments. So you can cancel the stop and reverse on soybeans. Okay, the adjustment saved us and kept us short. We're also using hybrid mode, which means we would only stop and reverse if the line was blue, and it was. And soybeans is one tick away now from hitting its first target, and it just did. So soybeans actually just won, hitting its first target, 1 3/4 points. Move your stop down to break even. Just hit its second target and pushing lower, and our stop and reverse adjustment was exactly what it was supposed to be. Saved us, kept us in a winning trade. And all I had to do was know the rules. Nice trade, Mike. Exiting all at target 2 is perfectly fine. You got 2 3/4 points, 1 and done, bing, bang, boom. Go enjoy the rest of your day. I love it. Way to go. Yeah, that's awesome. That's what Counterpunch Express is supposed to be, or Counterpunch Trader in this case.
Wow, really fast.
Okay, watch out. Dowie Mini is long. 31,517. The stop is at 474. A lot of up and down in the Dowie Mini. We've been able to filter out a lot of that noise. We finally got a trade outside of the range here. So hopefully it starts to move higher. Your stop is 31,474. We're targeting 31,554. And then 574. Definitely under some pressure here. Yeah, way to go, Mike. Soybeans, this trade plan is definitely a rock star. It's been working for years. And being able to finish quickly like that is... it's just fantastic. And sticking with the rules, right? The stop and reverse adjustment saves us in so many instances. So we barely survived this trade so far on the Dowie Mini. The stop hanging in there by a thread. This is going to make for a nice highlight reel. Anyone see Andrew Wiggins dunk last night on the Warriors? Look at that. All right, there's an Andrew Wiggins dunk in your face. Target 1 achieved. The stop just moved up to 518, 519. We're going to be 1 and done on the Dowie Mini. Stop just moved up to 524 and stopped out. That's all she wrote, guys. But you know, that's why we have stop losses, and that's why they're placed where they are. This stop loss was adjusted below the key level, and that's all it took. It got as low as 7.6. The stop was at 7.4, and that's why we hide our stops behind key levels. Made us sweat it out and ultimately produced a winner. 1 and done on the Dowie Mini. Gotta love it. Soybeans is still going, by the way. And it did hit its third target. And now the stop will move lower. The trade plan, this chart, maybe I don't have hybrid mode turned on. Let's see, it says hybrid mode on. Oh yeah, hybrid mode is on, but the stop and reverse adjustment is off because I do it manually. So if I were to put stop, what I could do here is I could use the tool in Counterpunch Trader and put in a 2-tick stop and reverse adjustment. The reason why I don't do that is because it would change the sequence of every single trade that happened prior. And I only want to adjust this trade. But just to illustrate how it works, see how it moved this up? But it also adjusted the entry on the prior trade. You see, so we don't want that. So we have to do the adjustment manually. That's why we do it manually. And so now the stop is moving because the system thinks it's in this trade here. So you have to know how to trail And you always want to trail 2 ticks above the signal line. So all you have to do is click on the last bar that closes, and then you could get the signal line reading 1704 1/4 and add 2 ticks and put your stop at 1704 3/4. And then what I like to do is you could just put a horizontal line at 17 3/4, and then there's your stop, and then you can just pull it down as each bar closes. You just follow the signal line down by 2 ticks. So that's a technique we can use because we want to make our adjustment, but we don't want the calculator to adjust every single trade on the chart. We're only interested in adjusting the trade that popped up so that we could stay short, right? So you have to kind of know these techniques to be able to navigate that sort of situation when it happens. And this is something that you could practice and get really good at, so it's second nature. Anyway, soybeans is still going. We didn't look at pound Aussie. This starts at 8:30. This one's going to lose its first trade. It did a good job in keeping us flat in all this crappy price action. And then we got a short trade here. And unfortunately, the one prior, this would have been a good trade. Right here, you see? And the reason why it's filtered is because the entry came a fraction of a pip in front of the 50 moving average. So that's the squeeze zone filter, because the 50 is pushing up from below the 200 and the entry is inside that zone barely. So if you're paying attention, you can move the entry down 1 pip, get it outside of the zone, and then you could literally take that trade. And if you do, you're hitting target 1. Instead of for 12 pips, you're getting 11 pips. And then you're one and done, right? Because that's like right on, it's like a hair difference. And if you just stay flat because it's gray, then you're going to take the next trade. That's a Johnny come lately, too lately trade. Just came too late. Yeah, it could have followed through and still won, but it didn't. Instead, it stopped and reversed. So short at 7674, so you got to adjust it down below the 75 to 74. And then you go long, not at 7705, but at 7707. You could adjust it 2 pips higher. And that's the loss, right? You lose a little, and then hopefully it keeps rallying up, and the second trade has a chance of winning, and maybe you escape the session with a 2-trade power of quitting result, but we don't know yet. Let me know if you have any questions on that one. There's always little nuances. Nothing's perfect, but if you know the strategy, you could do better than if you don't know the strategy, right? The strategy exists beyond all the dots on the chart. The indicators are tools to help us with the strategy, but if we understand the spirit of the strategy, we can become better at it and better at using it. A lot of great movement in unleaded gas. And just like crude oil, the first trade ends up losing here, but then it flips over to short. So it cuts that loss. Instead of a full loss, it cuts it by about 1/3 maybe, close to 1/3. And then that comes down and hits targets 1 and 2. I mean, just looking at the space between the entries and the targets, that should have been a 2-win sequence. But if you needed a 3rd trade, you would have been even better off, because look what happened on the 3rd trade. So unleaded gas wins with either 2 or 3 trades this morning. Crude oil wasn't so easy. It took more than 3 trades, and the mini plan, the mini session plan, I believe, has a 3-trade total. So I'm going to say crude oil had a losing session this morning, a rare losing Monday session. We're also looking at a custom Renko with the Russell Catapult. Figured this would be a nice one to kind of pay attention to. And I do like the idea of waiting 10 or 15 minutes on the Russell, maybe even waiting till 9, Well, it would be 10 East, 9 o'clock Chicago time. Half hour into the session is another good start time for this. I mean, you could make the argument to start right when the market opens, but it just moves so fast, especially with a custom Renko chart. I do think waiting. And I don't have a specific trade plan on this. I believe we're watching a plan that is all trades within a certain amount of time. I've got the automation running, but it's only on, that's the M. Yeah, the June contract. So we still have a few more weeks on the June contract. At least, remember, next month, the quarterly contracts, the second Thursday, the 9th, will be your last day in the June contract. So by Friday the 10th, you're going to want to be on the September contract, the U contract, U for underwear. Good morning, John W. All right, so don't forget that. So we're still in the June contract. And let's just see. I don't know what I have on here. I don't remember. Yeah, this is not the best looking. Looks like a double top up here. But this whatever trade plan this is running was working well for a bit. But this is not something we're going to want to model after. I don't even know what it is. Probably just a default 8:30 to 12. Yeah, it's all trades. There's a problem. 8:30 to 12. Oh, it's a 2 and an 11. Different cat line. Yeah, so this is some different kind of chart. Maybe it's not the one we want. What else do I have? I know I closed a bunch of stuff randomly, and I might have closed the wrong one. I don't know. What I think would be a better chart to look at, because I'm so up in the air with this custom Renko, especially with the markets being as wild as they have been. Here's one that you guys might like, and I think this is done really well. Let's just double check it together. I'm going to go ahead and, actually, that's not what I want. I want, do we even have it? Yeah. This is how long ago? J, CLN 22. So I'm going to copy this Counterpunch Trader. Whoops. CLJ, CLN. 22. I'm going to copy this Counterpunch Trader crude chart and change it to a Russell on a 377 tick. RTYM22. Oops, I keep using a keyboard that's not connected. Got too many things and not enough wires. RTYM22. There we go. Okay. So here we are at 8:30. Remember, Chicago start time. And typically we want to go to target 2 with this Counterpunch Trader. So it didn't quite get there. It came up and stopped out for a partial profit. So the first trade was a partial profit. The way Counterpunch works is you want to get a target 2 winner, or if you get within 1 tick to target 2, that counts. You have to just trade for profit and get most of your profit on that, right? That counts for power of quitting. So a target 2 winner or 2 target 1 trades, partial winners, break evens, as long as you're not negative. And then that's your power of quitting session. And so the first trade missed its target 2. It finally got within 1 tick, but it actually hit it perfectly on the nail, I think. But it doesn't matter because it already stopped out here, right? That it was trailing down and stopped out. So now you need a second trade. In the second trade, I've got these add-on trades turned on. Let's turn them off because we don't need it. It's too noisy. Just too confusing. So then here's the second trade, and that one does get all the way down to its target 2. So target, the first trade went from 1787.7 to 1784.1. 87, what's that, 3.6? 3.6 points on a partial profit, not bad. And then the second one made 6.1 points. So 2 trades, both positive, a super session with the Russell 377 tick and counterpunch. This is a plan that we used to look at all the time, and I think we might have even had one on a faster chart, like a 222, or I don't even remember. You could even try it on a faster chart, but the 377 tick has continued to be resilient with counterpunch and the Russell. Now, the Russell's changed because in the days when this first came out, it was $100 a point. Now it's $50 a point. Nevertheless, this is a good chart. I would encourage you, if you're looking for something to trade with counterpunch, you could try this. Let's take a look at a faster chart also. Let's just change this. We already know this is power of quitting. Got us to our goals. What happens if we look at was it a 2? I don't even remember what it used to be, but let's look at a 233. That's the next fib line down, fib number down. And let's see how this one would have done. So you got more trades, obviously. So let's see, do we have a 9? Here's our 8:30 start time, but it probably went too fast because after a few seconds, it's too low here. So this is where we might want to use add-on trades. But so far, you're flat, you're still flat. Then you get this trade here. And this trade is 6.5 minutes into the session, and it's a winner, a full winner, hits its target perfectly. See how counterpunch, it's just so accurate. And I mean, our goal is at target 2. You can't get much closer than that. And that was good for also 6.1 points. So the 233 tick, I mean, really, it's just that this went too fast. If you had the trade placed, I don't think you would have had to have it placed before the start time. Otherwise, you get filled. But again, too fast. So the next trade, and look at how it filtered out the longs, the 2 long trades that both would have been losers. And does anyone know what these filters are? You should know by now. I'd be surprised if you don't all know this. Does anybody know, or does anybody not know? Let me know what you think. Why were these 2 long trades filtered out? Anybody guess? Anybody know? You guys should all know this by now. But let's settle this. I'm not sure if there's a delay. Do you guys hear me? Testing 1, 2, 3. You're all asleep. You all hit your goals already. No one's paying attention. My work is done here. Does anybody know? Mike, do you know? You've been studying counterpunch, right? Why are these 2 trades grayed out? Now, you would learn this. John's busy with trades. Very good. Not trying to stir the pot. Mike, this is something that the Counterpunch Trader does. It does the filter for you. But the Counterpunch Express, you learn how to do this manually. So you would have to know to avoid these trades based on the training. Donald's got it right. It's the squeeze filter. So we need to review that because look at how this worked. It saved 2 losing trades and presented the next trade, which was the winner. And that's what we want. That's what brings these trade plans to life, is knowing these ways to handle certain chart patterns that where the odds just aren't as good for us. So this is how the squeeze zone filter works. If the 50 moving average is above the 200, so the 50 is always the mustard color. I make them darker. This is a 50, the mustard color. This is the magenta, dark red, maroon color is the 200 moving average. And I make them dark colors instead of bright colors. The reason why I make them dark colors is so it doesn't influence my trade decisions too much. You know, bright colors tend to make you think, oh no, you're going to hit a brick wall and you can't get through it. And that's just not true. But I do want to see where those important lines are. So I make them dark colors so they don't over-influence me. The reason why I want to see these two lines is for this. This is one of the filters that we use. It's called the squeeze filter. It's also in Spotlight Master Suite. We use it for that as well. When the 50 moving average is above the 200 and coming down, the space between the two lines gets compressed tighter and tighter and tighter. It squeezes all the way down to its apex. So I call this the squeeze zone. It's not like the John Carter squeeze. Okay, that's totally different. For our purposes, it's the 50 moving average pushing down on the 200 and the space squeezing tighter and tighter. Okay? So when the 50 moving average is pushing down and we have a long trade where the entry is inside that space, but the first target is beyond the line, right? That's why I make this a mustard line, because it doesn't cut the mustard. It's just a silly phrase I learned years ago, right? We avoid that trade because the odds are better that the trade to the downside will win. I didn't say it will work 100% of the time. It's just that the odds are better. So this is going to filter out more losing trades than you're going to miss winning trades over a lot of trades. So that's what filters do. So when you're learning Counterpunch Express 2, you want to know the squeeze filter, because Counterpunch Express 2 is not smart enough to turn these trades gray and filter them out. That's what you need to do as a trader. If you want the full Counterpunch Trader, which is an upgrade, obviously, it's the mothership, that has this programming built in so that it will filter out the trades for you. Okay? If you're using Counterpunch Express, you have to just know this rule. The 50 is above the 200 coming down. The long entry is inside the space, and the first target is beyond the 50 moving average. It doesn't cut the mustard, you squeeze it. It's a squeeze filter. And it avoids the two trades, you see? That's how that works. On a short trade, it's the total opposite. If the 50 is below, pushing up, and you have a short setup inside, a short entry, and the target's beyond the mustard line, the 50 moving average line, it would filter out the short trade. That's how that works, Mike. So it's really good to know, because if you were trading this with Counterpunch Express 2 and you didn't know this filter rule, and I do explain it in the training, you just have to review it again, but you might have got trapped. Still, you would have been in this first trade. Well, if you did, it would have stopped out. And then you might have got the second trade, and that one would have stopped out. So you had two losers in a row. So those are important filter. That's an important filter. Okay? There's also the chop filter, and that's different. You can see here, the chop filter also filtered out this trade, because the chop filter says that if you're below the 50 moving average and there's a long setup, you avoid it. You could take a short, but you can see here the short was allowed. Look at the short trade was allowed even though you're still in the chop zone. That's okay because you're below the 50. So you could take shorts. But if you're below the filter, you're below the 50, this has nothing to do with the squeeze zone. It's just coincidental that it's also in the squeeze zone. But if you're below the 50 and the target is beyond, and you're in the chop zone, then that's also a filter. That's the chop filter. Okay, so those are two filters that you need to know about, and that will help you. Now here's a little bit of irony for you. Now we are using the John Carter Bollinger Band squeeze filter because that's what the chop zone filter is. The chop zone filter is a way for you to visualize a Bollinger Band squeeze. And if you don't know what that is, I could explain it. But John Carter calls it a squeeze, the squeeze. It's called the Bollinger Band squeeze, but it's not the Counterpunch Trader squeeze zone filter. It's the chop filter that's along the bottom here of the high trend chop indicator. And that's where you see these dots on the bottom. And the green dot is when the price is entering or exiting the Bollinger Band squeeze. And what a Bollinger Band squeeze is when the Bollinger Band squeezes inside of a Keltner channel. Okay, and both using default settings. So you have Bollinger Band squeeze with default settings, Keltner channel with default settings, and when the Bollinger Band compresses inside the Keltner channel, that's called a Bollinger Band squeeze, and it represents a market that is compressed. The price action is compressed, very tight, and building pressure. And that's the key, is the building pressure. And because we use the 50 moving average to give us a clue which way the price is most likely to break once it breaks out of the Bollinger Band squeeze, because that buildup in pressure could make for an explosive move, especially when you have multiple bars. Like the longer the chop zone, the longer the Bollinger Band squeeze, the bigger the pressure that builds up, and usually the larger the breakout. And so we don't want to miss the breakout, but we also don't want to be on the wrong side, because sometimes the breakout gives you a false breakout, and then the move in the opposite direction is very strong. So the way this works is if we're going in the direction of the 50 moving average, the odds of us being on the right side of the breakout are much greater. So you are allowed to trade in the direction of the 50 moving average. That's why you're able to take the short trade below the 50. The breakout of the Bollinger Band happens here on the green dot and beyond. And that gives us a nice burst down to target 2. You see? And this is all built into the Counterpunch DNA. But as a Counterpunch Express trader, it's good to learn this so that you know what's going on. So there's a lot going on in here. I'm actually glad I pulled up this chart, because this made for a really good trading lesson. By the way, if you guys wouldn't mind hitting the thumbs up button, I'd really appreciate it. Anyway, let me know if you have any questions, but look at the trades that followed. Here's your reversal trade. So this, on a bigger time frame, this little Bollinger Band squeeze breakout, breaking out of the chop zone, it was a false move, wasn't it? Because it didn't really follow through very far. It was enough for our 233 tick perfect target. Look where the pivot, where it turns in the other direction, is like 1 tick after target 2, after a perfect target 2. Like amazing how Counterpunch tunes the trades to the market condition. And the reason why, it's because of where the exhaustion dots are and then how we measure the trade. Remember, the trade is measured from the highest point of those 3 exhaustion dots to the low of the setup bar, and that's your 1x that gets projected below your 1x target, your 1.5x target. And the odds are it's going to be able to cover the distance between the highest point of our 3 exhaustion dots to the low of the setup bar. If it breaks down and hits the entry a few more ticks below the setup bar, the odds are it's going to have enough power to go at least 1.5 times down. And that's why it's so accurate. And of course, the distance between our exhaustion dots and the setup bar is different from trade to trade to trade. So just studying or just continuing with the conversation, it does get 1.5 times down perfectly. And the breakout of the Bollinger Band gives us enough to get the target, but in the end, it's actually a false breakout. There's no more follow through, and then it turns and gives a real strong move in the opposite direction. And what I want to point out also is how accurate Counterpunch was at giving you these trades, because this is a totally different trade. It's bigger. The exhaustion dots to the setup bar, to the high of the setup bar, is a greater distance. And it did break out a couple ticks to hit the entry. And notice, like I said, the odds are it has enough energy to go 1.5 times. That's why target 2 is our primary target. Look how accurate that was. And it also gives you a favorable risk-reward ratio. Of course, the bigger the trade, the better the ratio. This one was 1.3 to 1, or 1 to 1.3, I should say, risk to reward. The other one was even bigger, 1 to 1.33. It's funny, I thought the white trade was bigger. The white trade was a little smaller, actually. And then the next trade also. That's a smaller trade, a little bit, and that one was able to get to 2x, 2 times the measurement from the lowest point of the exhaustion dot to the high of the setup bar. And now look at it following the 50 moving average, where it's finding support. Pretty cool, huh? That's all that works. It all fits together into this symphony of patterns that exist on all charts, will always exist on all charts, and has worked for like 10 plus years and will never stop working. You just have to find the best charts so that you get the price action that you need. You get enough activity, and that's where the 3-step sniff test comes into play, right? Are there enough trades? Are they an appropriate size? Can you quit with a positive result on a vast majority of your sessions with minimal trading so you can control your drawdown? Those are the components to a winning, successful trade plan, trade program, trade business. You keep it really simple. It's all contained right here. So this is a really good example, but those principles exist. Not all charts are going to be appropriate. Even though these patterns exist on all charts, it doesn't mean it's the best chart for you to trade. So that's why I say do your fast testing, use your 3-step sniff test, look at about 10 or 12 different charts and let the best ones present themselves to you, and then that's what you focus on. But you could use these same principles. And these principles also exist on my other strategies. It's just that the price patterns that we're looking at for trades are not the same as Counterpunch. They're different. Spotlight is very similar, obviously, because we're measuring the high of the setup, the highest point of the 3 dots to the low of the setup bar, for example. It's still giving us the same targeting scheme, but the pattern itself is not the same. It's looking at other things also, but it's built on the same idea. Of course, Catapult's different because it has to do more with momentum, and it doesn't use the exhaustion dots. It uses the setup bar. It's a different way of looking at things. Anyway, blah, blah, blah. I could talk till I'm blue in the face, as you know, but hopefully that was a good trading lesson for you guys. And then, the 10 a.m. mini session. Yeah, I talked right through it. Let's take a look at the full crude oil. We can look at the mini also. So 10 a.m. This one closed at 10. So here's your first trade. Plenty of time to take it. And you could see it was a perfect winner. So the 10 a.m. winning session on the full crude, as John pointed out, he pointed it out on the micro crude, but the full crude session was one and done. So it's been a really nice session. Almost 100% perfect, but not quite. And then I guess it wouldn't hurt to look at the micro also. Anyway, guys, I know I just threw a lot at you, This will be recorded. Obviously, it's on YouTube. It's being recorded. The replay will be available. You might want to jot down this date. So if you want to review everything I just talked to you about, you can come back and watch a replay on it, because I think there was some really important learning points about the strategy, the filters, how it works, etc. Might be worth reviewing for you guys. So this will pull up the micro. We'll take a look at it. And my voice is a bit strained. As many of you know, I've kind of been nursing along this ongoing, like, you know how singers get nodes from singing? Kind of affects their vocal cords. I've been dealing with a similar thing with my voice. And I need to rest it. I can't just continue to use it like I was a young guy. I'm not young anymore. All right, well, here's the 10 a.m. session. And it looks like there was enough time to get in on that. Plenty of time, actually. So that one was also one and done, as you could see, hitting its target 2. Target 1 is the primary objective, but it also got to target 2. See, that you notice how the targeting is the same as counterpunch. You go to the high of where the 3 dots are to the low of the setup bar is your 1x, and then it measures down. That's why these targets are so accurate, because this is a pattern. For whatever reason, I know there are people much smarter than me that could probably explain it, but for whatever reason, these patterns are what give you super accurate targets. If you look at the one prior, look at target 4. If you look at this one after, look at target 2. I mean, it's near perfect, not perfect, near perfect. Anyway, not every trade wins, of course, but it's beautiful when they do. All right, guys. I don't know what more to tell you. I'll hang out for a minute or two more just to see what questions there might be. Oh, let's review the Pound Aussie. So the Pound Aussie ended up being a nice winning session after all, right? You had to stop and reverse like we talked about earlier, but then it came up and hit a nice target 1 and a nice target 2, and then stopped out. So that ends up being a nice session, 2-trade session. The losing short trade, it cut the loss by almost half, a little less than half. You avoid this much losing, right? That's pretty good. Stop and reverses are a good thing. Then it hits a target 1 and a target 2 for some nice profit there. You know, it should be mildly profitable, just looking at the space. Mike, can you go over the stop reverse adjustment on beans? Yeah, good. So the typical stop and reverse adjustment, there's 2 things going on if you're going to use hybrid mode. All right, so let's talk about both. Hybrid mode says that if the trend mode indicator agrees with the stop and reverse, in other words, the long trade also has a blue trend mode indicator, it means that you're going to take a stop and reverse trade. You're short, you have a stop and reverse, but you're not going to do it right at the entry. You're going to adjust it up 2 ticks. So our typical adjustment on a stop and reversal is 2 ticks, and then we would also do a key level adjustment on some charts, like crude oil, the Dow Mini, the Russell, you know, the ones that are like a tenth or 0.1 or 0.01, I mean, the YM is just regular points. We'll do a key level adjustment also. But on the quarter point ticks, like soybeans, the NQ, the ES, well, the NQ I usually do more than a 2-tick adjustment because it's so fast, and that's a different animal. Let's just talk about soybeans. 2 ticks, no key level adjustments. You might make an argument to adjust it around the 50 moving average. That's a more of a chart level thing than a key level. Let me make it bigger so we can look at it. Okay, so here we are. We're short. The stop is up here. Let's put this line where the stop is. So here's the stop. Make it so we can see it. The yellow line. There's the stop. So a stop in reverse means you have to stop sooner, right? And then reverse to long. And that's at 1708 and a quarter. So we just instantly add 2 ticks. And you heard me call it out, remember? 1708 and 3/4. So I get so used to it, I don't even think, I just do it. And that's what you want. You want a reflex. But if you look at the 50 moving average, the 50 moving average is up here. It's hard to see, but it's actually at 1708. It's also at 3/4, a little beyond. You could make an argument to do a 3-tick adjustment, but I didn't do that. I just did a 2-tick adjustment. That's kind of discretionary. That's something you need to make a decision on. But I went with 2 ticks. I had to do it fast. I didn't even look at the 50 moving average. I just wanted to get that 2-tick adjustment in right away because there wasn't a lot of time to react. And so then it came up and it went through the entry and it only went 1 tick higher. 1 tick. The 2-tick adjustment saved us from getting long. It could have come up and hit the 50 moving average and then we would have got long and then it would have maybe went down and we would have lost 2 trades in a row. That would not have been good. I do think it might have been a good idea to make an adjustment of beyond, all the way up to, I don't know, 1709, I guess. That's a big adjustment though. 3 ticks on a 1/4 point tick chart. If you think of it on a percentage basis, it's a big adjustment. But you also had to your left 2 spikes at 1708 and 3/4. So you had these 2 spikes and the 50 moving average. And I think that I made a mistake. I really should have made a 3-tick adjustment. But I made a 2-tick adjustment and it was still enough to save us. But now in hindsight, I'm looking at it. A 3-tick adjustment was probably a good idea. I don't like to make a 3-tick adjustment unless I have multiple reasons. And I do. I have the 50 moving average. I have 2 price rejections with these bearish bars. These are both bearish bars, right? The price could not get up to 1709 here or here. And then we have the 50 moving average here. So a 2-tick adjustment, maybe it was lucky that it didn't come up and touch that level. I don't know. Anyway, I'm just thinking it through. Mike, that's what it was. It was a 2-tick adjustment. You adjust the entry on the reversing trade up. You adjust the stop on the original trade down to that entry. That's what a stop and reversal is. But I'm not taking it at face value. So there's a philosophy behind this idea, and that's, I think, a bigger thing for you to understand. The way I look at it is, I want to protect the trade I'm in. I'm in the short trade. I want to protect it. I want to ask for extra price action confirmation that the market wants to go higher. It might still bump me out. I might still lose. That could happen also. It's like an insurance policy. It's great when you don't need it. Or maybe it's great when you do need it. Let's just say that. You pay a premium for protection. That's the whole point. So I want to protect the original trade by asking for extra price action confirmation if the market wants to go higher. If the market pushes up to my adjusted entry, I've got to be willing to get on the reversing trade. Because in reality, we don't know what's going to happen. The price action is going to do what it's going to do. But we have to believe in our trade setups. We have to believe in our strategy. We have to believe in our trade plan. And if we second guess and doubt and don't trade it according to our rules, what do we have? We don't have a trade plan anymore. What do we have? It's a slippery slope. You're going to end up just losing all your money over time. In the end, if you don't believe in your trade plan, you're dead. You just don't know it yet. Sooner or later, you're just going to lose your money. It happens to everybody. It may not happen today. It may not happen in a month, but it will happen. That's why it's so critical to have rules that you could test and prove. If you remember all the things I talked about in the past, proving it yourself first, testing it, taking ownership of it, getting really good at it, and then running it like a business and not worrying about whether a trade wins or loses. Just follow the rules that you've tested and proven. These stop and reversal rules, there are reasons behind why we do it. We want to stay short if we can. That's the original trade. We want to give that trade every chance to succeed. But we also have to be willing to change our mind and go the other direction. The market can turn and will turn any moment. But we also want to make it prove to us that it really wants to turn. And by adding the extra 2 ticks, it's going to eliminate some trades like today that the market really didn't want to turn. It wanted to keep going down, and it was able to keep us short, you see? So that's the whole point. You have to be at peace with the fact that we're never going to be 100% perfect and right all the time, but we don't need to be. We just need to win and grow our accounts over time with a proven trade plan. And these rules are part of that. You could always try testing another variation of the plan. Like, what if I don't take any stop and reversals? What if I always stay with the original trade? What would happen? Or you can try another one. What if I take every stop and reversal without making any adjustments? What would happen? Those are all valid questions. Have fun testing it. You have the skills, you know how to test it. I've been talking about it for years. We could always review that. Review that next time if you want. But I chose the middle ground. I want to try to protect the original trade, but I'm willing to turn and go with the market if the market pushes past my adjusted stop and reversal. It gave me the additional price action confirmation that I needed to jump ship and go the other direction. Fair enough? How's that feel, everyone? Remember, you can't control what you can't control, and we can't control price action. But what we can control is what we do with the price action. And that's what we want to focus on. We want to focus on what we can control, not what we cannot control. Yeah, sure thing, Mike. Any other questions? By the way, thank you for that. That was a great question. I think I'm finished. My work is done. I hope you enjoyed the session. I hope you all have a wonderful rest of your day. I may have, what's the date today, the 23rd? No, I was thinking I'd have a problem on Wednesday. I don't think I will. I should be able to be with you guys on Wednesday. All right. Please hit the thumbs up button if you haven't done so already. You guys have a wonderful day, and I'll see you next time.